What's up? What's up?
Crash again. Dude, I gotta say, I love your dedication to the name Crashmas at this point, how you even made it your Zoom name. It makes me laugh.
I mean, you gotta know who you're talking to, you know?
Yeah, dude, I like it. God, dude, at this point, Christmas is only what, 4 months away?
It's actually my last name is Thomas, so the MAS comes from my last name, and
Ah,
then the crash part comes from back when I was a smoker, and it just put me to sleep every time.
sick, dude.
So, dude, it's been my nickname for like 15 years.
Dude, I love that, dude. I never knew. Never knew. Thought you,
Yeah,
thought you were just festive.
no, nope, just the nickname, man.
That's awesome.
Are you guys hopping in this fantasy football draft tonight?
Dude, I ain't a football guy myself.
We'll still take your money, man.
Yeah, well, dude, yeah.
I kind of want to, but 250 is a little steep.
Yeah, I don't know. It's fun, and it's like 4 months of football or whatever. So that's
Yeah,
how I justify it.
dude,
It
I think
would be nice to talk some shit though for fantasy football, you know?
Yeah, talking shit's the best part, man.
Rob's Fitness, how we doing? I've been good, man. How you been? Haven't seen you for a little bit. Hope you're good.
What up? Yeah, I've been busy, man. Can you hear me?
Yep, hear you now. Hear you.
Okay.
Been busy.
Yeah, I've been busy. That's when I saw that this was a swing trading lecture. I figured because that's kind of what I have to shift to a little for now is more swings than intraday trades. So
Nice.
looking forward to
Nice.
this one.
Good deal. Yeah, Scotty, dude, I'm sort of right there with you. Like that's my feelings on it. I've never loved it. Mom and dad are diehard, brothers diehard. It was just I never did that. I was more the type of guy to get kicked off the organized sports teams than, be on the organized sports teams. So
Yeah, I'm a hockey and a golf guy. I watch hockey and golf.
I basically just hope the Padres win the World Series every year. I haven't actually watched a Padres game in probably uh I don't know, 15 years or something, but I still am rooting for them. Been a fan since the early 90s and have watched them choke for 30 years now. So, still got to vote for the one team I like. Welcome,
Yeah,
welcome, everybody.
I'm sorry, I'm sorry.
I was just going to say we'll give it a few more minutes. We ain't getting started yet. I got that link posted a little late, so we'll give it a little bit here. Oh, yeah, Scotty, you kind of know the pain, huh? Well, my poor grandma, man, she was a Cubs fan, and the year she passed away, she got to see the Cubs win. Do I know why the Mets are in Flushing, New York? I mean, I can guess. Yeah, Brewers, yeah, yeah. Nice. I'm happy to know that IoT is full of people that like teams that choke.
Are you swinging that Tesla by chance?
Fuck yeah.
Yeah.
Short and proud on that thing right now, dude. Fighting the crowd, dude. But there, we're talking Tesla tonight, because fuck, everybody watches it. Pardon my language. We got to we might as well talk about it. Talk about why I'm trading it the way that I'm trading it, and it just so happens to be a good one, that I can talk about a swing trade on because I happen to be in it. We're going to talk about Apple as well, just kind of for our examples tonight, and trades that I think were good, trades that I think were bad, trades that I took, things like that. And so, yeah, whatever. Let's get started. Must be sad, dude. That thing is on a heater. I can't even, I saw somebody else even talking about how stuck they were. Look at that thing, I know. And you were telling us, well, I mean, look, this 1263 level, like that, my only level on the VSAT chart, Viasat chart is this. I'm willing to bet this is where you told us to buy it.
Yeah, probably. Maybe a little bit. Maybe up by that 14-ish, somewhere in there. Maybe I know I was talking
Yeah,
about
well,
it.
I mean, look at even up here, you probably brought it up to me and we drew this line on one of these little pullbacks, uh, but yeah, welcome everybody. We'll get this thing rolling. Microsoft Metas, yes, this lecture I'll say, to start, and welcome everybody. Dirty River, happy to have you. Uh, well, I'm gonna yap for a little bit, but we should have plenty of time at the end of this where we can look at some other charts, maybe some ideas that you guys have. I'd really like to spend, I mean, well, shit, there's 14 of us. So, if anybody has a question, we'll be able to get to them if those numbers stick around. But let me make one more post and we will get to rolling.
River?
That's the link with it. Raphael, how you doing?
Oh, good. You can post that Shark is here with us, then everybody will jump in.
Yes, so I'm actually was just gonna talk about that because somebody brought it up. For anybody who doesn't know, me and Shark are real good friends. And so I actually reached out to him yesterday. Him and I will be doing a lecture together, likely, sort of a Q&A thing. But we'll talk about Shark swing trading. I've known Shark a long time. Don't get me wrong, he has like just the golden child pick of things. It's insane, like I've said it before, I'll say it again, I'll say it a million times. Shark is the best swing trader I know. Anybody who is a swing trader, they wish they were as good as Shark. He is just really, really unbelievable. So we actually uh uh we're gonna get him in on a lecture with me. I'm covering for 1K here in like 2 weeks on a Sunday. So we might do it a Sunday scan, or we might just do it on one of my normal Thursday lecture days. But we are going to get Shark in here on a lecture. Stoked on it. So let's see. Okay, so yeah, for sure. Oh God, and I love Shark. I don't know if you guys have ever got to talk to him, but he's like one of the nicest people on the planet. And you might notice him and I are, you know, we'll give you our opinion on things, but you got to listen to the people who aren't the loudest people in the crowd, the people who are banging their chest. Those aren't the ones you want to listen to. You look at the best traders around, like your Tilios, your Sharks, for example. They say a lot while saying very, very little. They're very good at what they do. They aren't looking for good jobs or pats on the back or tags in gains tab or anything like that. They're here to help all of you learn. Those are two guys. They're two of the only people that I will reach out and ask questions to and opinions on trades and things like that. Those are two guys that I hold in real high regard, and they are worth listening to. So we'll be lucky to have Shark in here. I will say him and I trade swings, especially. We trade in a very, very similar matter. We look for the same types of things. It's proper swing trading. Basically, everybody does it the same way. The more sketchy type of swing trading, a lot of like what we see in OT from people, works and can work, in spectacular fashion. However, swing trading is, and I guess we'll just get rolling here again. Welcome everybody, Dirty River. Swing trading is no questions asked, unless you're trading leaps, and I'm talking real leaps. If you're trading 2-3 month out contracts, whatever, January 2026 contracts, even, you do have time, but you don't have a ridiculous amount of time. And you might see, I actually had somebody message me about a swing trade they were in, and they had a month and a half of time, and the stock they were in, it hadn't moved a ton, but it was back to the price they were in at, even a little bit above it, and they were still red, and they had 2 months of time or whatever. And that's one of the issues with swing trading, is that it is very, very high risk. Things can go against you, dumps can start that just never stop, and maybe you get saved, maybe you don't get saved, but when we're swing trading, we need to understand that we are putting on substantially more risk. You know, we're up to the whims of the market. You don't know what's going to happen. And so when I am looking for swing trades, I am still going to run a relatively tight stop. And that's one of the big issues that I see. And I've been getting just countless DMs about swing trades lately of being down super bad. And then, you know, the question is always, hey, I'm down 60%. What do I do? I'm down 50%. What do I do? And unfortunately, my answer is always that trade should have been cut a long time ago. One of the big issues that people run into when they're swing trading or learning to swing trade or things like that is that, you know, for any of you guys that have been to my lectures, you know, I'm really big on market statistics. And I'm not talking, you know, seasonality, like, oh, September is always red. Like, I don't buy into the seasonality stuff that much. You know, September was green last year, as an example, you know? So I don't buy into the seasonality. I'm talking real repeatable market statistics. You guys have heard me talk about double bottoms, you know, 80% success rate for at the very least a scalp. So I like that. I like those odds. One of the really big statistics that I talk about is 80% of breakouts fail. So what do I mean by that? You know, this applies to 5-minute charts, hourly charts, daily charts, weekly charts. It doesn't matter. You know, everybody likes to trade bull flags or things like that, and they don't realize that they're really just trading a consolidation, letting the levels be tested 3-4 times, aka not breakout, fail breakouts. And then once enough volume, once enough momentum has been made, the breakout will eventually come. Well, why I like to teach this statistic so much is because, you know, we have, you know, everybody when they become a trader. I'm a breakout trader. You know, I'm a swing breakout trader. That's what everybody when they begin trading, you know, say you've been trading 2, 3, 4 years, whatever it is, everybody goes through this phase where they say, oh yeah, I'm a swing trader. I trade breakouts. Well, what you are saying by saying you're a breakout trader is that you trade setups in the market that fail 80% of the time. So when you are swing trading and when you're trying to catch breakouts, I am very specific on how I want to enter those trades. You know, even rejection trades, anything like that. I try to be very, very specific on what I do to take those trades. And so you're
Isn't
gonna miss.
isn't a swing trader that trades breakouts like that putting down the type of risk where you're basically longing the top or shorting the bottom,
When they are
right?
doing it exactly, when they are doing it incorrectly, that is exactly what a breakout trader is going to do. And so with that, you guys know me, I always like to take it to the charts. You know, I can sit here and I can talk all night, but we need to be able to apply some of this logic. These, you know, don't try to buy for the breakout, buy the pullouts before breakouts. And so with that, we're going to get into a little bit of discussion. I'm going to do a little bit more talking, but tonight we're going to talk about Tesla is going to be the one that we're talking about. And so I want to do a really brief description on something that's discussed a lot and misunderstood a lot. And so it is market structure. And so what do people mean when they're talking about market structure? It's simple. It's, you know, people will try to like, you know, talk to you for hours about this. Market structure is two very simple things. The market only does two things. It consolidates or ranges, depending what you want to call it, and it trends. Those are all that it does. Those are the only two things market can do. You will never have a very large breakout without consolidation first. There will always be some sort of consolidation. Tesla is a wonderful example. NVIDIA is one of the better examples. Let's see if I got a blank one. So NVIDIA is a wonderful example of it. You know, everybody talks about NVIDIA and they talk about how it has been, you know, oh, NVIDIA only goes up, blah, blah, blah. Well, they ignore, you know, there's no denying NVIDIA does do a lot of going up. I'm obviously not trying to say it doesn't. What they ignore is this. Here is NVIDIA, albeit a big range. And, you know, this was a $100 range back before the split. NVIDIA spent from May until December consolidating. Then the consolidation finally breaks. And in the matter of 2.5 months, this price has almost doubled. So long consolidation leads to big breakout. Again, right up here, big range, of course, again. But NVIDIA, this is basically consolidation from February until May. So another 3 months of virtually sideways. Not to say it's untradeable or anything like that, followed by very big breakout that leads to, again, more large zone consolidation. Failed breakouts, you notice most breakouts fail. Breakouts fail, fail everywhere until they finally break. So large consolidation. Obviously, we had the mayhem of the beginning of this year, so it makes it look a little bit crazy. And then ultimately, this thing has over doubled since that sell-off. Large consolidations lead to large breakouts. So why do we care about this as swing traders? Because we know most breakouts fail. Is there times where you start to see something like this? Okay, we are consolidating, we are gradually going up, SMAs are catching up, blah, 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 blah. We have now broken out, we've had strong closes above it. We can start to look to enter swing trades once breakouts are confirmed. However, that's not going to be your most effective trading. And because we know a lot of breakouts fail, I remember this one up here. Everybody was trying to buy the 140 break for the rip over 150 on NVIDIA, and they were just disappointment after disappointment after disappointment over and over and over again. This is what you're going to see on breakouts more often than you see this, because we know we need big consolidation for those breakouts to come. And then, of course, ultimately, you can catch a nice little bounce. Well, how can we use this as swing traders? And what is the benefit of, just really looking big picture on some of these things is when you want to catch a breakout, you will oftentimes be provided the best possible entry if you treat the market as ranging and you're a dip buyer at the bottoms of ranges. That is where you want to be trading, because we can see here, and let's ignore the numbers. Obviously this is a nice big range. I guess we could even go down to that past one on NVIDIA. So what we see here is our range. So we know somewhere down here, we want to be dip buyers on NVIDIA. So anytime NVIDIA is dipping down to these zones, this is where we want to be buyers on NVIDIA. When everybody's starting to get nice and pessimistic and we're saying to ourselves, this is still a range. This is where we put on swing trades. No questions asked. This is always going to be the best entry. And so we're just using NVIDIA real quick. We're going to get into the other ones. We're going to talk about, some of the setups and do charting to really see what we're doing. But I want to, really show you why are we dip buyers down here? Because it gives us the best possible entry for the breakout if it actually comes. So the people who buy up here, disappointed. Any of these pops, they're disappointed that they're trying to catch this breakout up. And ultimately it does come. We're dip buyers down here. So if we're in longer term swing trades, 1, 2, 3 month, 4 month out swing trades, that type of thing, where we're really looking for the breakout, these lows provide the best possible entry for the breakout. This one's a little rough. You got chopped for a month or whatever. But if you're holding your trade, you're holding solid above 45, you're sticking with your trade, you're bullish on NVIDIA as you should be, understanding you'll add more down here if it shows up when this breakout comes. Anybody chasing this breakout, you're up 100%, 200%, whatever it is. Then you let the people push your trade further. So with that, we're going to talk about 2 different trades tonight. First one we're going to talk is Apple. A lot of people trading Apple right now. I'm using these ones because they're recent trades. They're trades that people have actually been watching, things that, people care about. So Apple for me, I'm gonna, as I said, I'm gonna do charting here. Mics are unmuted. If you have any questions, if I'm going too fast, just stop me. This obviously isn't a charting lecture, so I'm not really gonna be describing what I'm doing as much as going through and just charting. This is exactly what I would do on any stock that I was going to trade. I go through, I mark any major highs and lows, places where I might start to have interest of putting on trades or shorting the market or buying the market or whatever it might be. Any of these big old consolidations around here, any of these nice lows down here. And so all we're going to do, we're only marking the major levels. And now we look at Apple big picture and we start to analyze the market structure of Apple. So what I always do, the easiest way to do it, draw a box. Encompass your major consolidation points. Obviously, we had failed breakouts up, we had failed breakouts down, but for, all intents and purposes, for over a year now, Apple has been between 200 and 240 for almost the entire time. So big old range. And we know in ranges, we don't have interest of getting long at highs for swings. Pullbacks will happily buy. So when I am looking for a swing, my ideal swing setup is going to be, if I'm looking to get long, we're discussing, we'll focus on long swings tonight. But reverse everything I say for short swings. So my ideal setups for long swings are pullbacks to strong support, SMAs either pointed in my direction or consolidating sideways. So what do I mean by that? I'm not a buyer of Apple when these SMAs are crushing down. When all of a sudden we start getting bounces and Apple starts flattening out, I start to get interested in the dip buy trade. Then, as I said, I want them at strong support. I want the market to support my thesis. And so what do I mean by that? If I'm in dip buy mode for swings, I want the market overall to tell me to do that. I want to see your Amazons, your Microsofts, your Nvidias. I want to see everything running. If I'm trying to long swing on tech, then I want to see the tech sector running to support me of, okay, if a pullback comes, I'll buy the pullback because the market is buying these. So if we pull back, I want to buy it to see if the market continues buying these. So Apple is this wonderful example. We all heard it in trade for the better part of a couple of months. Apple's about to die. Apple's going back to 170. Apple will be going to April lows. Anybody who is in voice chat with me, anybody who's traded with me, anybody who's been in my lecture knows that I was very, very bullish back here at these major lows, our 200s. I was screaming from the tops of the mountains, buy all dips to the 195 to 200 zone. Well, now we started pushing up and we've got a nice push up. We have market strength. We finally have the tailwinds of some of the bad stuff for Apple out of the way. And so we're looking, Apple starts to look good. Well, now everybody suddenly wants to be swinging Apple long. They hated it at 200. But for some reason, we got up here to 230. And all of a sudden, every single person thinks that it's a great time to get into an Apple swing. Then you have the unfortunate situation of flow. For anybody who doesn't know, I like flow. I think it's relatively it is extremely far from necessary. And it's oftentimes hard to interpret. So we all saw the big Apple flow on, some, I don't even remember what it was. 230 calls or something like that. Basically on the break of this 230, and it was like $4 million, And so exactly. Raphael knows I was preaching by Apple down here. And then I fumbled it. We fumbled it right here. We were long here and out here. And that was the run of a lifetime right there. But so we get a nice push up. Well, everybody starts buying this Apple flow and for a swing trade. And I instantly know nobody has actually looked at the chart. If you're buying Apple here, you need a reason to be a buyer on Apple. Flow is never, at least in my opinion, all on its own, a reason to take the trade. That person may be putting $4 million into it, and it might be the second leg of a trade, and it might be a spread, and they might actually want it winding up below 230. But everybody's chasing it, they're chasing these Apple calls. And so you look at the chart. And then actually, hold on. This one on here too. Kind of want this one on here too. So we start to look at the chart. Where do we want to swing Apple? not at 230. Did we get a little bit of a move over 230? Sure. But this is, I don't care how you add it up, a very poor entry on Apple. You don't get long up here. We look left, we see how this 233 has behaved. It has been massive resistance. We have no business and should have no want to get long here. So we zoom in a little bit. And we start to look at the short time frame here. We now look at Apple here and we say, okay, Apple is setting lower highs. Sure, it's only 4 candles, it's going down. None of these are good candles to be a buyer on. So is it selling down to support? Sure. But it has massive resistance overhead. It has trend overhead. It has big daily level overhead. It has previous high overhead. Is there a little bit of money to be made in this bounce? Absolutely. But what if you swing and this happens? Which is exactly what happened. Everybody ignored the daily levels. They ignored the lower highs. They ignored the intraday double top or the back-to-back day double top. Rejections are basically the exact same spot. And they made the decision to swing long and they got blown out. Well, now it's bounced and they made some money. Good for them. You know, whatever. But terrible entry on the swing. And why is this a bad entry on the swing? Because of what the market structure is telling us. We know that Apple has really struggled at this level. It does not mean we are bearish on Apple. It doesn't mean anything like that. You know, as I have said, I am bullish on Apple. And you should be bullish on Apple and people should continue to be bullish on Apple. But that doesn't mean you just buy calls. So that's what we saw. You know, people got wrecked. I don't know, they were down 50% or so. Ultimately, the bounce came and they were able to get out for like, I don't know, 20% profit or something like that. I have to point out that is I don't know, better part of a 3 risk, 1 reward trade. That's not a good trade. Very, very bad trader's equation, risk to reward ratio, whatever you want to call it. Very, very bad. Well, we are bullish on Apple. So where do we enter the swing on Apple? We look left and we say, where has the market supported us before? And that is where we want to be buyers. And so we just look left and we start to say, okay, where is our risk reward? Where do we want this risk reward to line up? Now we start to look at Apple here. And as I said, I want to know where the SMAs are. I want the SMAs pointed in my direction. I want the overall market in buying mode. And I want to see a sell down to strong support. And so, oh yeah, look, Raphael's already on it. Yeah, double bottom. So we start watching here. Apple takes this bounce. Can you risk the buy on this one with the close of our strong level? Absolutely. But we get a bounce up to the trend. Nice little trade right there. No questions asked. Sell us back down. Now you've set me up triple bottom, strong name, strong sector, holding the level we want. We buy this pullback. Is it always going to work like this? Absolutely not. You know, we want to assume that it's not going to work like that. And we're just taking the best possible entry that we can. And it took us, you know, everybody was buying up here. We waited a week and end up with a very nice entry. You know, you are not going to always get the big bounce. It's not always going to work like this. This was just a really nice setup that I myself took a long swing on Apple Tuesday night or Tuesday morning, something like that, on that pullback on I think it was Tuesday. I don't even know what day it is today, but on this pullback. And you know, you guys know me, I sell when I get the nice move. I ultimately sold at this trend on that day. The breakout did come. Sure, I wish I was in there. I could have managed it better, but I caught the $3 or $4 rip or whatever it was on Apple, you know, in the day. So my swing ended. However, this is the setup I like for a swing. It does not always set up like this, but no, Michaels, you must have just joined because I literally charted all of these before we started. But just look left. Where do we get bounces? Where do we get consolidations? Where do we get big rejections? And those are the types of levels we want to be marking. Always charted on the daily chart because they're going to be the strongest levels. So this is my preferred setup. Where would my stop be? It would likely be this 221. When I swing trade, you know, I'm just kind of adding things in here. When I swing trade, I never take a full position. Nobody should ever take a full position on a swing trade. Always leave yourself a little bit of room. Unless it's, your plan. Your plan is like, I need this bounce to come today. Always leave yourself a little bit of room to add a couple more. And to me, holding this strong level, we're buying at this strong level. We have SMAs crossing over. SMAs, very bullish moves on this thing. Pull back to here. This is where I would add to my position. But this is, this is where I would add to my position as long as it was part of my plan. So does everybody see this? Because this to me really is hands down my favorite swing trade setup. We have good market context. We have good SMAs. The trend is up on this thing. They're buying in that sector. We're setting double or triple bottom, however you want to view it, at our nice daily level. This to me has all the makings of a very nice swing trade. And so it ultimately worked very nice. That part doesn't matter, when the profit starts coming, great. It's all about having your plan for this trade. So on daily time frame, SMAs for me, you're seeing them. 20, 50, 200 SMA. If you want to have something to bridge this gap, you can always run the 100 SMA as well. But 20, 50, 200 SMA are crucial. This one, the breakout of the 200 SMA with the pullback to it gives me even more love of this trade for a long trade. Again, I just want to emphasize I did not hold all the way, but I can tell you right now, if I held all the way, I was out today, because we're right back to the do not long Apple zone. Or at the very least, I would have been down to an individual runner to see maybe the pop comes, but we have to view this still at this point. We've rejected the same level we've had a lot of issues with in the past. We're technically, of course, we'll see how tomorrow goes, but as it stands right now, this is a lower high. We were not able to go set a new high. We very well could go set a new high tomorrow, but we still have to view this on these daily timeframes as, okay, I don't really want to do that. I don't want to be getting long up here. How did I pick my entry? It would be, this is my daily level. And then, so for all of you, who trade with me, when we're in VC, we're mostly looking at these 5-minute charts. So as I recall, when I bought this, I saw the bounce, I saw a couple wicks off of it. I saw us closing above this candle. So I entered somewhere around here, 225.50. I can't tell you where it was. I did not expect the run to the trend. Somewhere around this trend is where I exited on that day. That's what I did. And I take it, I'm taking that entry on, we looked at it on the 5-minute there. We looked at it on the 5-minute here. But pull up the 15-minute and all of a sudden, this is a nice indecision candle followed by the reversal candle on the 15-minute. You can take this entry, and even if it's just a day trade or a scalp, your stop's right down here. Here's your entry. Here's your main target, but that's all, that level is daily information. Fitness, very good question right there. It's tough. So I will not stop out of a swing trade and we're going to, right after this, we're going to talk contract selection. But I would not stop out of a swing trade because of a volatile 5-minute candle. Funny enough, Tesla's actually a good example of it. We're going to talk Tesla here in just a second. It'll be a little bit quicker. Tesla's another good example of it. So this candle happened the other day when somebody was messing with me. Really nice dump. And they said, don't buy Tesla puts. Right here is where they said, do not buy Tesla puts. So nice dump, $3-4, whatever it was. This would not stop me out of a swing trade. Is it a hideous candle? Absolutely. But this isn't going to stop me out of a swing trade. I would want to see a bigger breakdown than, I would want some serious badness for me to be, stopping out of a swing trade based on, a 5 or 15-minute movement. It's really going to be daily closes below a level. Roro, I use the 2050 200 SMAs. A lot of people love the 9, both Raphael and Started with 1K either use the 9 EMA or SMA on the daily. Some people use it intraday. I personally never liked it, so I don't have the 9 EMA on my chart. I like the 20 and 50 if I'm going to pick EMAs intraday to use. But 2050 200 is just a very classic SMA setup. Well, George, because I'm scalping along with it, which we're getting into next. Okay, so final thing we're going to talk here on Apple. What was my contract selection? So when I swing trade, my rule of thumb is I will not buy a strike outside of my expected move. And so what do I mean by that? We're basically buying the dip at 225. And if I was really trading this, you know, if I would have held this longer, blah, 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 230 would have been the target. That would mean I would not buy above a 230 strike. This doesn't mean, oh, well, I think, you know, oh, I'm buying this swing trade at 225 and I think Apple's going to 270. I'm going to buy 270 calls. You need to live in reality and you need to live in what the chart tells you. And we know that Apple is very likely going to have trouble getting past 235. So sure, that can be our target, the double top, but stick with reality. Understand your 230 to 233 range is pretty dang big. So when we select a contract, we want it within that range. So I was in 227.50s. That is how I pick my things, you know? Yeah, exactly. People bought Apple here. So I need to DM you too. I got a question for you. So yeah, people bought Apple here. Terrible. I'm sure people are probably swinging Apple long today. Might be a little better considering we're getting the breakout, but this was a horrendous entry for Apple calls. No matter how you add it up. So for contract selection, we keep it in here. I traded the 227.50s. That's what I traded. You know, that's what I went for. I wanted this move to come quickly, so I was in next week contracts. That's it. Like I was, you know, if we would have stopped, you know, if we would have really got crushed and we would have got down to this 200, I would have tried to buy a couple more. I would have trimmed my ad on the bounce, which we're going to get into in a second. I would have trimmed my ad on any sort of bounce and then I would have rode the trade up, or I would have kept that stop tight. A close under this 200 and we were going back to 215, in my opinion. And so B-Dub, is that because we hit weeklies at about the same time I was hitting my swing in voice chat. So that's sick. Good for you. But this is about that point where you want to be down to one Apple runner, as you said. So that's how I choose contracts. There is times where going out of the money makes a little bit more sense on specifically a really volatile ticker. So the next thing that we're going to talk about, and I'm going to go quick on this one so we can get into questions, just to explain a trade that I'm in and a trade that I took and how I have managed it accordingly and ways that we could, you know, ways that we can change them. Oh yeah, you're in, that's those flow ones, I think. I think that's on the people at $4 million or whatever. People are losing it over it. So Tesla, as always, we want big, you know, market context. Market context on Tesla is this thing has not held a pump in 4 years. So no matter how you add it up, I don't care if you're the biggest Tesla bull on the planet, this chart right here tells you that shorts have made substantially more money on Tesla than longs have. So it's no secret. I don't like Tesla, whatever, you know, none of that matters. But the market has told us Tesla is not ready to hold a bounce. It has not been ready to hold a bounce since 2021. So I like to short bounces on Tesla. So again, we're going to do the exact same thing. I'm not really going to talk about it, but I'm going to chart Tesla. How I would be charting Tesla, you know, always marking all these major highs, mark all these major lows. We're really just going to stick to the zone that we're in. We'll get over into here. We'll mark some of these. Really don't need any of those. We'll mark these down here. We'll mark these up here. We'll mark this obvious big consolidation here. And last one we'll put on here is this one right here. So here's Tesla. Here's, I mean, you know, give or take the levels I care about. I could just pull up my chart and show you. Here's Tesla. Here is the exact same trend line that every single person in the market is watching on Tesla. And so to me, I look at this chart, okay, and something that you learn in trading, and you might have heard me talk about it, you might have heard Shark talk about it recently, a crowded trade. And what do we mean by that? It is a trade that every single person is watching and every single person is taking the same trade and every single person thinks the same thing is going to happen. It is extremely rare that that happens. And so Tesla's a funny one. We get our bounce. Oh yeah, I meant to have this level on here too. Oops. So here's Tesla. You know, last week, everybody is, everybody is all bowled up on Tesla. Tesla's breaking out. Tesla's breaking this trend. So people start hammering it long at 340, whatever, on the first breakout, not, third attempt of this thing. Not beating the statistics yet. Everybody starts getting all bowled up on Tesla at 340. Oh, Tesla closed over 340. It's going to fly, blah, blah, blah. Put in a couple nice bounces. You could not have paid me to buy Tesla calls right here. I'll tell you that much. So I had a buddy, and how did I work with him on this? And unfortunately, he didn't listen to me, but I wanted to talk about this. There's no denying overall, this is a bullish setup on Tesla. Like, you can't argue, like, it is a bullish setup on Tesla. As we discussed, without large consolidation, long consolidation, you don't get explosive breakouts. I would say consolidating for the last 3.5 months is a good, solid consolidation. There's no denying this is a bullish setup. However, it is a very crowded trade, and this is a bad entry. So what can you do here? Because I get it. You want to play the Tesla breakout. So how can you trade this accordingly? And this is something that I mentioned. You trade against your position. And so what do I mean by that? It doesn't necessarily mean you have to short it or anything, but it's when the market provides you some good trades, you take that. So if you're long on Tesla, and my buddy, he was long, September or October calls on it, so he has time. His stop, him and I talked. As crazy as it is, you're buying 340. It is a breakdown here. It is a breakdown here. Outside of this trend. So you got $30 of risk on this trade, showing you even more reason that it's a terrible trade. Maybe you get the bounce to 366, so you get $20 up for $30 down. Terrible trade. But what do? You scalp short, or you day trade short. That's the thing with Tesla. It, funny enough, is a very technical trader. It respects its levels very well. If it breaks above them, it often pushes and then dumps again, breaks below them, often sells. So it is a very technical trader. Well, you start looking here. And so that's what I teach people to do. Trade against your position. You took a bad entry, fine. Maybe you realize after the fact, terrible entry. Pull back, pull back, pull back. You're trading short. I mean, look at the Tesla chart until, here just whatever it was a few days ago. Look at the Tesla chart, and this thing provided, everybody tried to buy this breakout. Breaks levels, goes to trend, touches levels, goes back to trend, breaks the trend, dumps, pushes over the trend, pushes up to the level, dumps below the trend, dumps down to strong support. So where do we enter a swing trade long on Tesla? And this, where this is where it's about to get funny. Where do we enter a swing trade long on Tesla? Right down here. When everybody is thinking Tesla's going to die, well, you buy at 320. You don't buy at 340. 340, 345, 350 is your target. So you don't buy up there, you buy. And so this is a setup. Again, I didn't take this trade. I don't long Tesla unless it's a same day Friday for fun. Very obvious where you buy. You buy at this trend, you buy at these SMAs, and your stop is underneath it. You got about $5 risk. Minimum case scenario, you're going back to this trend. So you got yourself $9 up. You break the trend, you go to 337, you break again, you go to 347. Well, there's your trade on Tesla. This entry was terrible. Then say you're in this swing trade. Maybe you scalp short, so you protected some profits. Well, today, Tesla, whether people realize it or not, it's up $40 in 4 days. Prints a disgusting candle yesterday. Today, we break that massive 350, take a couple wicks to it, you exit your longs here. There is zero reason ever to let a trade that has gone really in your favor move $15 against you. That is terrible swing trading. And so it brings me back around to, if all of your swing trades are going minus 50%, minus 40%, and before they go green, your entries are bad. I don't care who you are. I don't care about any of that. Your entries are bad. A good swing trader sits and waits patiently for this trade to come to you.
Basically, just like when you're day trading, you got to
Yes.
follow your rules, man, and
Yep.
and
And
take
so-
the L when you need to, you know.
Exactly. And so now you guys get to hear about my Tesla trade. So I don't like Tesla. And I think that, Tesla is, generally speaking, it does not hold bounces. It's a weak stock overall. It's dead money. It hasn't done any, not to say it hasn't had some really great trades over the last couple of years, but it's dead money. Well, I'm short Tesla. And why am I short Tesla? This is another of my favorite setups in the market. 3 pushes down, buy that bounce. 3 pushes up, short this bounce. And so that's what I did. And here, my plan on Tesla was very, very cut and dry. I was shorting around here, this 348, 349 area. I knew I had my trend up here. I knew where I would add to my short position. And so that is what I did. I was, there's like, I'll show you guys. Let's see, let me go to my normal one. And I think I deleted this today. So I got to put my trend back on there because we rejected it. So I was happy. So there's my trend. My entry short was somewhere over here. 347, 348 zone. Even down a little bit lower. I think it was 346, 347 zone, something like that. My ad was a big rejection off of this trend. And so, obviously I saw a little bit of green yesterday or 2 days ago, and then we got that nice big rip. And then, and yeah, I got to have some laughs right there. And people told me don't be short Tesla. Obviously went against me. I'm going to be the first person to tell you it went against me. Could I have traded long? Yes. But I left room to add to my position. So we hit the trend virtually perfectly. I didn't add yesterday. We had, it obviously sold nice at the end of the day, but good little consolidation. I was obviously green at the end of the day, or right around, I don't know, maybe I was down 10%, 5%, not very much, going into the end of the day. Nice sell after hours. When we took this first bounce this morning, this somewhere up here is where I added. And why did I add up here? Because I now knew, okay, we've rejected. Here is now my hard stop. Any close above this trend up here has now become my hard stop. So risk reward obviously dramatically favors the short side. We're up at these trends. If you're going to be anything up here around 350 on Tesla, the 350 to 355 zone, it should be short, in my opinion. If we get the breakout and we keep going, great, then you can be long again. Very, very easy short. Did I expect just an absolute clobbering on the way down, just a dump of a lifetime? No, but it happened to work out for me. So no questions asked here. If you bought Tesla calls here, bad job. And if you didn't sell Tesla calls up here on your swing trade, bad job. You need to let these trades come to you, buy these trades and trade them that way. And you guys can see any trade that I take, Tesla's still a downtrend, whether you want to admit it or not. Tesla is still in a downtrend. And so I'm trading with the trend. I'm trading a sideways SMA. I'm trading consolidation, and I'm trading short at the tops of ranges. It is a very, very safe trade. People can be all Tesla bull all they want, but you still got to trade the chart. So then, just to show a funny situation here, that's called a 3-push wedge. I'm sure you guys have all talked about me or heard me talk about 3-push wedges in voice chat. I trade them all the time. So all of a sudden, Tesla's crushing, takes a little bounce up, takes another bounce up. At this point, that's when my trend was drawn. So the second this trend was drawn, and I said, okay, here's my first leg, here's my second leg. If this sets a 3-push wedge at this level, I'm taking all the contracts off. So I'm down to 1 contract. Obviously, it's now bounced and given back some good gains on my last contract, but here was my exit. Similar pattern to the daily time frame, just on a shorter time frame. Sell down to big strong level, 3-push wedge, which is a reversal setup. Right here, 340, that dip on Tesla, as funny as it is, while this is a very bad entry, this is not so bad of an entry. We have a breakout, we're pulling back, retesting, coming to our major level, and this should have been our short side target, which now, if you're long here, you don't have to have the really dumb stop way down here that you do on the first stop out. Your stop is really a daily close below 340. If it goes under 340, you're going to get crushed. So if you're trying to get long, 340 was your spot to get long today. Even though this 340, 345 was horrible before, market context tells us this is much better of an entry now. We aren't pushing up into a trend. We aren't, setting these major lower highs yet. There's reason to be a buyer here. So again, just to do a quick rundown, if I'm trading swings, I don't really care what happens on the short time frame. I'm using it for an exit or an entry. Beyond that, I'm managing them on the long time frames. Where are SMAs? Are they pointed in my direction? If I'm trading it as a range, are the SMAs pointed sideways? Am I trading with the trend, or am I shorting a rip or buying a dip? Those are the two, you need to be aware of what you're doing. If we're shorting a rip, we have more realistic price targets. If we're buying a dip, we have further away price targets. Never buy the first breakout. Will you miss some trades? Sure. Will you make a lot more money not buying the first breakout, waiting for the dip to come and trying to catch the second one? 100%. I guarantee you will. And then the final thing is always leave room to add. There's never a reason to start a whole position on a swing trade just right off the jump. Always leave yourself a little bit of room to add, because as I said, some trades can get away from you. They absolutely can. If we had a little more time, I'd show you another example of a trade that I am in that has got wildly away from me, but I've been trading against it the entire time. So I don't even care. So does everybody get it? Simple, cut and dry. Swing trading should be easy, and you should understand that the risk is a little bit higher. That does not mean you should be holding minus 50% trades, minus 60% trades. I don't care if you have a year. That's a bad trade. You need to have more reasonable stops. And if your trades don't involve those, then there's no, then the entry isn't good. If your stop can't be somewhat tight, your entry is not correct. You're either chasing or buying at highs or things like that. The longer you wait for the good entry to come, you dramatically reduce risk and you dramatically increase reward. So does everybody get it? Swing trading, pretty simple, pretty cut and dry. Any questions? George, we can actually talk about that in video today, because I'm not gonna lie, I almost wanted to swing on it. Oh man, hold on, I gotta see. Give me 1 second. I gotta turn on another screen to see what chart I'm on my major one. Oh, well, I probably should have just tried default. So here you go, NVIDIA today. So these fibs are funny because I've had them on there for so long. We're up into the insane ones at this point. But think of it as a level 180.33. It's a big one. We got 180 right below, so obviously another big one. But struggling here, downtrend. Here's my short entry. Oh, and I should have my other indicators on. So this was originally I was considering getting in on. Originally I was considering getting in on a swing trade on it, but I chose not to. But here we go. Short entry right here. Virtually no risk. We break this trend, I'll stop out on a real tight stop, 20 cents a risk or something like that. Trimmed here, caught a little bit of this push down, trimmed here, ultimately came down to the hourly 20. This is where you would have wanted to be the dip buyer today. Close above the trend. I'm willing to bet that's Tesla. So I gotta be real with you. I'm not long Tesla. Like, the real breakout on Tesla comes over 370. If you're getting long up here, you're just buying highs. Like, don't be the person who's buying at highs. I think this was even
Buying resistance.
Yeah, you don't
Heavy
buy
sellers
calls.
too.
And that's what we see people do it all the time. I mean, I don't know why, like, even people who have experience, people who like think they're amazing traders still just hammer calls at resistance, buy enough time they can hold them that hopefully the bounce comes, that's
Bro,
not trading. It's just
I took a real good trade on Open Door. It was been going kind of nuts.
Yeah.
If
it's
you pull
pumping
up Open Door on the 4-hour chart, dude, I charted okay, see that first big wick on that green candle back there?
Uh-huh.
that the 4-hour chart? Oh, no,
Oh,
switch
no,
to the
that's
4-hour. Okay. So you see that first big red candle on that first rip? Yeah.
Uh-huh.
That whole wick, the whole
Mhm.
red wick, I labeled that as like bag holders, right?
Yeah.
And
Yeah.
if you draw a box around that whole wick and drag it,
Yeah.
you'll see
Yeah.
that first it rejected that on
yeah.
what day is that down there? On 8/18 or something?
Yep.
8/18?
Uh-huh.
Yeah, right
Yeah.
there. And
Yeah.
it was funny because I sold my share position right there, bro. And then it started dumping, and I was like, yep, there's the bag holders getting out at break even.
Yeah. Well, dude, and then this was even, I mean, this was a funny one. This thing ran 40% in a day, and
Yep.
they swung calls.
Oh, I know. I was playing shares though, so I bought
Yeah, I
shares.
mean, swinging calls on a 40% day, I was so happy it worked for him. But as we can see, it is now crushed. It's 25% lower than where they bought them.
But I was sitting in front of my computer after once it hit that zone, I sold no hesitation, dude, because I knew what I saw on the 4-hour, and then when it started dumping, I'm just laughing, sitting there laughing, going, "Oh my god, the bag holders are getting out! They're buying
Yep,
my
they
gains."
did, and they got out in a hurry, dude. They saw a couple bucks and they're
Hell
like, "I'm
yeah!
done with this pump and dump." So
Hey,
GJR,
oh,
rarely is it a good idea to just swing short, you know? You still need the same reasons. Like, you don't want to have calls up really nice and swing short just for no reason, because you might just lose money on the puts and your calls might make money, or vice versa, it doesn't matter. Uh you might just, like end up losing money you don't need to lose. So on something like, we can just go back and we'll just use Tesla as the example, so say you are a call swinger and you get this nice big push up and then you print this hideous candle off of your trend, and this is very likely a reversal to the downside candle and there's no reason to stay strong there or stay long and strong there. You can swing a little short on this. Yes, you're right at 350. Yeah, you're like blah blah blah. There's maybe a couple of reasons to not necessarily swing short there, but we got the close, right at or just under 350 yesterday. So maybe you do swing a put for a little bit of protection. Well, if you're in calls and we close like right here and we're just in no man's land, there's not a ton of resistance around or anything, there's no reason to swing a put. Still look for your target. And then covered calls, I mean, they're fine if you have 100 shares and you don't care that it gets taken away, but I think that oftentimes the reward is just too low to do something like that.
hey, River, real quick. I just want to revisit my question about like the close above the trend line, because you were talking about your short position on Tesla and
Uh-huh.
how you added this morning, and you said you would have stopped out
Above the
above
trend.
that trend line. Would
Yeah.
that have been on the daily, or would that have been like an hourly?
On the daily for sure. On this one, and I should say, so this is funny enough. I was just teaching you guys about trades within your trades within reason. Well, as we all know, Tesla is super expensive. So when I put this short on, and you guys are all gonna laugh at me, I'm in 310s, so I am well outside of my projected move. Like, I mean, I won't lie, I wanted to move down to about this 333. That was really my main target, but it's Tesla, it's extremely expensive. I know enough about Greeks and I know enough about contract selection that I knew what my risk was, and I liked the Greeks on the contract that I got. So I got a month of time with decent Greeks for a price that I felt was worth it. That's why I'm in that 310. I can't really recommend other people doing that until you learn a bit more about it. Learn a little bit more about Greeks. But yeah, it would be a daily close up here. And like I said, I have a month. I would still be stopping out because I could be wrong. Again, just because I won't get long up here doesn't mean it can't keep going. And this would violate my trade plan, and once my plan is no longer intact, I exit the trade. Do I start a swing position after earnings? Not the day after. I mean, that's a death wish. That's like, I mean, don't get me wrong. On occasion, you'll get one of these, but 9 times out of 10, you aren't going to get that on after an earnings. And it's something that, Sharks talked about. I've talked about a million times. 3-day rule. Let everything settle out. I love a trade on an earnings name. I even mentioned Crowd and Nvidia, both of them, in trade for last night, saying they'll be fun tomorrow. The day after is fun. I would never start a swing position. I mean, it's just a very, very low probability setup. You're way better off letting it chill out for a few days. Because oftentimes on earnings, you can get that very dramatic move, and then you can get the market to digest for 2 or 3 days, let those contracts get a little cheaper in value, wipe off some of that IV and leftover value, and you know, and get a better entry for a better value. So no, and I've just seen it too many times, you know. I mean, we've all had hot streaks on our institute. I was like, I got like 18 earnings trades in a row or something like that. But I don't care who you are, you're guessing. And the guessing will eventually end for you because it's quite literally impossible to know what is going to be in the earnings reports before they come out. We can do all the reading and all the research that we want, but we do not have the information. So no matter what, if you trade the earnings, it's 80% guess, you know? So it's better to let earnings happen, let the market digest it, read the earnings report, and decide if it's a buy or a sell off of that earnings report.
Hey, River, speaking of earnings, just a quick little, how does NVIDIA have a double beat and they announce a multi-billion-dollar share buyback and it does nothing?
Because they're losing fucking 15% of their money they make to an unnecessary tax, and they're missing out on approximately $32 billion a year by not being able to sell to China. So,
Oh, wow. Okay. All right.
and that's the thing. So everybody always talks about, you know, how did earning, you know, why is it down when they beat? EPS is one of the most unimportant sides of things of ERs these days. Every single company will have something that matters. I'll use AT&T. It's one of my favorites. Is debt down and our subscribers up? That is all that matters. If debt is down and subscriber numbers are going up, AT&T is going to rally. No questions asked.
I got another question when you have a second.
Yeah, I got to do IBM here for real quick. So IBM from scratch. This is funny. I love that you're bringing this one up because we did this. This is all from a class 2 weeks ago where, or whatever it was, however many days ago this was. IBM was right here. And I was getting roasted by you guys in here telling you this is where you buy IBM. And you were all telling me it was going to 220 or 215. It's going down. And here we are, you guys, we're $20 higher. But let's check it out. Time frame, long time frame, over to here. Then we'll do a new one. We're just gonna call it your name. We're gonna turn on SMAs as always, daily timeframes, going right into our targets. Then we go through piece of cake, major highs, mark all your major highs on the way up, get that one in there, mark all these major highs, mark any of these major lows you got all through here. Another one there. Ooh, that's a nice one. Go mark that.
Major gaps.
Mark this. Yep, mark some gaps. Gap lows and highs. Zoom in here a little bit. There we go. Here we go. Then we zoom out a little more. We say, okay, where's our trend falling on IBM? You probably can go a little bit lower, but where's our trend on IBM? Then we come into IBM and we say, okay, we don't care what's going on here. We don't care about none of this. We care about this trend. Once we're below our 200 SMA, we are looking for the trend. We are dip buyers at 234, no questions asked. Our first target or first major target going to be this 240, 241 zone where this big breakdown continued. Our next target is going to be where this breakdown continued, major daily level 246.80, big consolidation zone earlier, and 200 SMA. So right up here is going to be your target. We do not buy calls here. We can buy calls on these dips with stops under this trend, but we do not buy calls here. It doesn't matter that our target is higher. You're buying resistance here. So this is my IBM chart. Super simple. Beautiful swing trade down here off this 235. And now we're up, I guess, what, $10 in a couple of weeks. Nice one. Real nice trade right there. Oh, Nick, dude, Nick, you hit those crowds in after hours. I am so fucking jealous. I wanted to so bad. Because I got asked, people said, you know, what do you think of crowd earnings for? I said bullish, but doesn't mean it's going to go up. Dude, had I seen this hit down here, I would have piled. I mean, this was this was one to get in there. I mean, I didn't expect it to necessarily be up $50 off of these lows down here, but I
Dude,
would
I
pile
took my
it in.
profits at like 4:30. I'm like kicking myself.
Beautiful trade, love it.
Yeah.
Rower, you're already, Rower, are you already in those? You're in the 1121 285 calls. There's some inherent issues with that. The main one is that you're $40 out of the money. I don't know when you bought them, but
Ooh,
that's not
40 up.
that is not a lot of time to be trading something. What I mean, God, $40. I don't even know what is that. I mean, 20%,
IBM.
20%
I mean,
out of the money. Sure, it was cheap, but it was cheap for a reason.
how many days did it take IBM to make that little grind up? What is
Right? This
that?
was 2
Right?
weeks to grind $10. So I
Yeah.
mean,
Oof.
and honestly, as I said, I'd likely be, exiting a lot of that trade here. I mean, we are breaking this trend even. That was even a little additional confirmation right there. But we're slow grinding. We got this 200 SMA in a row, and I would much rather like not be in that trade and wait for the 200 to break, give me a retest and get in there.
Your
But,
river. I think we talked about this IBM 2 weeks back, and I did a 241, 260 October calls.
Yeah, there
It's
you
still
go.
far, but it's running too slow from last 2 weeks. I'm waiting for a little bit pump. It's running way slow.
Yeah. And I bet you it's going to give this pop to the 200 in a couple, a faster move up to there sooner
Exactly.
than later. But yeah, I assumed that was that's what we were talking about. I had a feeling it was you.
River,
Hey,
I
so
have a couple of quick
But
questions.
yeah, but I gotta
It's
say,
okay.
you're in 241s. He's in 280 something's,
It's too
285s.
far.
Those are very, very very different setups.
If you're taking March next year, then 280.
Yeah, then I'd probably say you're okay.
River, can you hear me?
Meta 750 for tomorrow.
You able to hear me?
Oh yeah, I hear you. You're good.
Sorry, this is George. Quick question. I get confused on like you're swinging on the daily chart,
Yeah.
but you said if a long goes down 40-50%, you should get out of it. So I've been focusing on chart stops, not necessarily a percentage.
Yes,
How should I manage that?
Well, you know that your stop is, that your entry, if your entry does not provide, and you use the Greeks, is how you analyze roughly dollar amount and percentage amount, whatever it is that you're risking. If your entry requires you, I'm going to go back. Apple, terrible entry. If your entry requires you to hold, your stop is down here below where it should be. This 224 zone is about where your stop should be if you're buying up here. This is too big. This is a bad entry. If you're buying 230, you got resistance overhead at 233 and your stop is at 224, then you're potentially making $3, risking $6, not a good trade. And so if the entry doesn't provide you less than a 50% stop out, then you don't take the trade. Like if you're viewing this as your entry, you need to be prepared to stop. And you might end up not waiting for that daily candle. And so for me, on Apple, we can go back and look at it and pretend I took that trade that I wouldn't take an Apple call for free right there personally.
That guy's question kind of correlates to mine that I'm going to ask in a minute.
So right here, this is where people were buying Apple. Okay. So, and I'll remove the gray box so we can see. So, okay, fine. You buy the Apple dip here. Okay. I don't know where you buy. So you buy the Apple dip here. We ultimately do bounce up and close above your level. Cool. You're sticking with your swing trade. Well, for me, we know this 229.30 was pretty big. It was where the market wanted to show up and buy. So we're going to go to the next day. Okay. And we'll try to do this slow. We're going to go to the next day. Okay. We push up to our 230, our level that we were buying off of, we get clobbered. At this point, the trade is very likely invalidated. The trade is very likely invalidated. The candle is closed below here, rejected our daily level after breakdowns, weak buy up over it, losing the previous low of day. For me, I'm stopping out on this candle or the next bounce candle I see. This is my stop. My planned stop would have been, theoretically it closed under this 230.41 on the daily, but this is one of those ones where, and maybe they are just shaking me out. I start to feel uncomfortable. We're below, we're below all major levels, and ultimately we sell, and we keep selling. And then we come down to our level. And now we can start to say, okay, this is where I want to be a buyer, and so we reclaim it, we get a pullback to it. This is where we want to buy. And this is again a similar setup. Maybe, maybe we buy here 226, 225.75. Stops 224.91. We got
Thank
a
you.
buck risk, and we're
Last
looking for
quick
the move to the
question.
trade.
Last quick one. I know everybody has questions. Okay.
Oh, you're good.
You often mention, buy the dip. Oftentimes more than not, I am unable to figure out what the dip is. And how do I get better at that?
The dip is a dip to your daily level. The dip is not just a red candle. That's not the dip that you're looking for. We pushed up here to the trend and we rejected it. This isn't necessarily the dip to buy because it's still no man's land. I mean, you are up here by the trend. I don't know what EMA is or anything we're doing. It's still kind of no man's land. You want to wait and maybe you miss a trade. And that's what I got to emphasize. Missing trades is great. There's a million more to buy, but here's your dip. And this is, like I said, this is the one I bought. Here's your dip. It hits your level. It holds your level for your daily level, 15, 20 minutes. Here's your entry. And again, if you get crushed, then maybe it's not a swing trade. If you get crushed, then you do have to have a point where you say, okay, I'm wrong on this trade. I don't care if you got 3 months on the trade. When you're wrong, you're wrong. That's it.
River, go back to that dip. I got that
That's
work. That actually looks like it'll work out for my question.
Uh-huh.
So let's say you're looking for a swing trade and you find one, and you wait for the daily level, right? So see how we dip down. You're looking to go long on a swing for Apple,
Yeah.
for say. Let's say you take that entry you just highlighted.
Yep.
Would you stop out on the smaller time frame under that daily, or would you stop out on the larger time frame, let's say 4-hour or daily, under under the structure, like if it breaks structure, for example?
If it breaks structure and holds under the structure for like hours of the day, there's a very good chance I'm stopping out. Or on a situation like this one where we bounce to our entry and get crushed off of it. And this is, you see this is 10 minutes into the day. This would have been a stop out for me, no questions asked. I would have stopped here. I mean, we would have bought the close, looking for the bounce up to there. Our ideal stops would have been right under here, the previous low a day. If you're giving up previous low a day, there's statistically, there's a pretty good chance you're going to keep going under it. And so really, your stop could have been up here. It's generally a terrible idea to stop out of a swing trade on the first 5-minute candle of the day.
Well, that's what I was getting at. It's like when
yes.
do you stop out on the smaller time frame, or you know what I mean?
You start to see this kind of stuff, and you start to see everything lining up in the market, which this was one of those days where it did, So we've broken below our level, we've retested our level, and we failed our level. We've broken low a day. Hourly 20s getting crushed. SMAs, EMAs are getting crushed. We're giving up previous low days. We're under VWAP. Everything on this chart says Apple's going down today. So you take that stop. I don't care how much time you have. You take that stop. And even if you just end up getting back in the same contract, you still let something happen to give you a reason to get back in there. And so this, I like this setup. It's also higher low double bottom, it's double bottom.
So if you take that setup, are you going to stop under that daily level or under that low over there under the trend?
I'd probably stop under this low.
Okay.
Down here. Yeah, I'd probably stop under this low. If it's a swing trade, if it's a scalp, if I'm trying to catch a volatile bounce off of 225, my stop's below this trend. Tight. But this is your real stop down here, or where maybe you add a couple more because it's the true double bottom. This was one though, you get the longer time frame double bottom, then you have a nice little setup on the 5-minute, but you got a real beautiful setup on the 15-minute with a hard sell, nice indecision candle. This is, I'm buying the first dip under this 15-minute candle right down here. And that's, like I said, that's what I did on that one.
But would you recommend, like, for someone, because I've been trading for a couple of years in this Discord with you guys now, learning a lot. I typically don't like swinging options particularly. I've done some swing trades on shares positions, but I'm looking to try to start doing some option swings. Like what guess my question would be, is it better for someone who's learning to do like stick to swinging shares more than
Yes.
options?
Yes,
Okay.
and there's, I mean, so one of the key things of trading and how I treat trading, and not everybody does this, like
I know shares have
I-
unlimited time, but you still
yeah,
want to follow
and-
your rules and
and
treat it the same.
I scalp to finance my day trades, to finance my swing trades. Like they all work together, you know?
Right,
Like
right.
I can show you guys an example. And this is a trade that I'm in, and it's one that's got completely away from me, you know? So I want this bounce on Walmart. Super hype, shark alerted it. I figure that's a good sign for me, you know? But so I want this bounce on Walmart. We've tried to catch it in VC multiple times. We've thankfully got some very nice trades on it. So I got in around here at 98 bucks on some next week 99 calls. Well, Walmart normally doesn't get crushed like this, and it doesn't, you know, I mean, we can see some big moves in recent times, but normally Walmart doesn't do that kind of stuff. It's just had some news. So I was trying to catch this bounce off of here. And so we scalped it a bunch of times, 5 times over something in the last week in voice chat. Well, my 99 calls that I'm still holding, because this trade has got completely away from me. They're down 75%, if I had to estimate right now. I don't care. They're paid for from scalp and day trading. So just blind swinging on, not blind, but you know, no matter how good your plan is, you should still be able to manage it. Uh, you know, you should still want to manage that trade. And this thing's been going against me. And so, you know, obviously I've been trying to catch bounces. We've caught some nice bounces on it. I do still like this consolidation. Can't get over 96.50 to save its, or yeah, 96.50 to save its life. But I'm still holding the trade, part because I'm wrecked and part because this 96 is the last line of defense. I mean, I will ultimately stop out if we just can't sustain this. And I don't love these candles. I know we got the 200 SMA somewhere down there below us as well. But I'm sticking with the trade, part because, you know, though it's gone much further against me than I ever wanted it to, I've traded against it the whole time. So I don't really care, you know.
Those are two indecision candles too, so it's gonna go somewhere soon.
We go somewhere. Indecision
Yeah.
and inside.
That's
you
2
know,
days
so-
of a consolidation, or 3 almost, if you look at that. If you
and a
count that
big
red.
zone, you know, this thing,
Yeah.
this 96 provides some moves, but regardless, it's a terrible trade. I mean, I'm wrecked. That's all there is to it. I'll be the first one to tell you it's a bad trade, and I'm super, super happy that I did not alert it in voice chat, because wow, people would be so disappointed right now. But I'm still in there, you know, and I mean, now I got next week, and I need a thing to bounce $3 for me or something like that. But I've traded against it so much
Which
that,
it
you
could
know,
totally do. I mean,
it could,
But-
yeah. I mean, sharks in there, so let's pray, you know. So it totally could do it. We'll see if the bounce comes. But
it
regardless,
went down that much in a couple of days, a few
yeah, let's
days.
get it
So I
up
mean,
that much. I like that.
right?
Yeah, I like that. And so, you know,
Is it just
regardless,
me, bro? Or
I've traded against it, so I am net positive on Walmart overall, you know,
Yeah.
from all of this trade. Even being down, I am still slightly green because I've traded against it, you know. So if the bounce comes, great, I get to recover, and I get to, you know, I get to be happy for myself that a terrible trade worked out in my favor and I got lucky. I'll tell you right now, I don't have that kind of luck, so I can almost guarantee you that I will not see profit on these. But hey, that's the way it is, you know. It just got a little away from me. Let's see, Nick. Ooh, Marvel. I know, I'm so disappointed. You guys know I like that one. Yeah, you guys know I like that one. I don't like that. But I'm still
Wrecked.
I'm
Holy
nice.
crap.
I'm in there about 60, I think. Let's see. I'm in there 62. Yeah, it sucks though. I know, I almost trimmed, but I was like, nah, there ain't no way it's gonna be that bad. But it was quite the miss. It was, and not very good guidance. No, Bogdan, I can't. There's too much alerting in here. Well, I'm not saying too much, but like, dude, we got 10 people alerting trades. The last thing that is needed is more trades. Like, I mean, even I was just looking at my spreadsheet. Another just insane month of over trading. We're 90 trades in voice chat. I mean, that's just over trading, no matter how you add it up, you know. Technically we've done all right, you know, but that's over trading in a big way. And that's just scalps and some day trades, you know. There's really like very few swings on there. Oh, did Telio alert those IBMs that you were talking about? Or not alert, but option alert those? What? Wow, 285s for November 21st. $1,000,000. Interesting. I got a feeling they go red before they go nice and green though. Oh, that was yesterday though. Oh, nice. You're in that snow. Yeah, that thing was a heater. But I mean, yeah, I'll tell you what, I would not have stayed long at 250 myself. So nice sell on it. But basically, probably just coming right back down to dip by a point.
Your River, so I have a question on this one. The way AI infrastructure, both MongoDB and now this one, the way they get very bullish guidance, and even the MongoDB today 8% increase on the next day as well. It's like
I know
$20
that one's
up.
been
That's
been
crazy.
insane. Yeah, that one is psycho. That one is psycho.
Yeah, so I sold my ER at 249, and right at the last candle, I took some swing. I want to see how it does. So I took the
Yeah.
October calls.
I can't lie, I know I did just say that I don't love swings the day after earnings, but I'll tell you what, buying this 240, 241 zone with stops under 236 makes with
Yeah,
time.
and
And I
then-
know that you trade with time and all of that, and you get it. I'm not saying swing weeklies on this, but
Yeah.
a little $4 stop looking for the move back to 252. I mean, risk 4 to make 12, no questions. I mean, I know that's not the option price, but risk $4 to make $12. I'll take a 1 risk 3 reward trade all day long. So while it is a little worrisome right after earnings, I still think it's good, I think it's good. I do think that the loss per share is interesting, but I like where you're at for sure.
yeah. There is still gap remaining around 259 or 60 on a daily, which I saw.
Oh yeah, I mean, and it's gonna keep going. I mean, like this.
Yeah.
Eventually, this thing will go. And that's the nice little. It got a nice little boost that it needed.
Exactly. Yeah. That's why open the October swings. Let's see.
Yeah, I think I imagine you'll be good.
How about Oxy? It's just the last one. I
Yeah.
started swinging last week on this one. It break the downtrend.
Wow. I haven't looked at this in a long time, as you can tell. Buffett is torched. Buffett's got to be down billions on this thing.
Yeah, look at the downtrend.
Wow.
Even there is
It
a
finally
smaller
break it.
downtrend. Yep.
Ooh, but look at that's the risk zone. Or did it crack it today? We are right at that little risky zone right there. 47.45. That's about that. 47.33. So big close a little above it. 47.51. I'd be watching that. But nice reclaim of the 200 SMA. SMAs are now pointed in your direction. Funny enough, you even have a nice little, yet another nice little
Exactly.
trend
That's
there.
true.
Yep.
Yep.
And then had a nice test, had multiple tests, had a failure with a pullback. Here's your buy. I mean, very similar setup to honestly that Tesla buy, nice little buy right here. Even though it's under trend, under SMAs, I get all of that, big picture. This is about where you want to be a buyer. So yeah, nice spot to be in.
And this is one of the cleanest chart I see from long time. It's making trend line. All the whatever indicator we see is pretty easy on this one.
Yeah, I think that's a beauty. I think you're in the right place. Hey, so I got a question since you're on the mic. How do you say your name?
Viral.
Dude, that is what I have always said. And I got corrected in voice chat and they told me it was viral. And I was like, I don't think so, but I wanted to make sure that I haven't been saying your name wrong forever. So thank you very much. But with that, you guys, we're gonna call it here. We ran a little late tonight, but thank you all so much. Fun talking swing trades with all of you. I know most of you scalp and day trade with me, but I do swing trade all the time. So if you're ever checking them out, always feel free to shoot me a message.
Thank you, sir. You have a good night.
Thank
Yeah,
you.
right on, Robs.
Thank you,
Everybody, thank you all
thank you.
so much, and we will catch you tomorrow. Little Friday fun. You guys have a good rest of your night. Thanks.